Well, some business stories. The Nigerian National Petroleum Company Limited says it has so far spent over $1.1 billion on the ongoing construction of the Ajaokuta-Kaduna-Kano gas pipeline and station project from its cash flow. The NNPC Limited GCEO, Mr. Mele Kyari, stated this while touring some of its project sites in Kogi State. Mr. Kyari said the company would continue to fund the massive project, which it was delivering in phases and has been active even though it had not had a third-party finance for the project. He disclosed that the NNPC Limited has funded over $1.1 billion on the project, and to date, none of the project activities is abandoned, as reported. He said on completion, the pipeline would deliver 2 billion cubic feet of gas, powering industries, powering plants, and are creating gas-based industries. The GCEO further said the gas pipeline was projected to support power plants with a total of 3,645 megawatts, adding that it will soon begin construction of Abuja-Kaduna power plants in earnest. Still in the oil and gas industry, the nation's National Bureau of Statistics says the average retail price of a litre of petrol increased from 185 naira 30 kobo in March 2022 to 264 naira 29 kobo in March 2023. The Bureau made the declaration in its Petroleum Price Watch for March 2023, released in Abuja. It stated that in the March 2023 price of 264 naira 29 kobo represents a 42.63% increase over the price of 185 naira 30 kobo recorded in March 2022. Comparing the average price value with the previous month of February 2023, the average retail price of increased by 0.20% from 263 naira 76 kobo. On state profiles, Imo paid the highest average retail price of 332 naira 67 kobo per litre, followed by Taraba at 330 naira per litre and Borno at 324 naira 55 kobo per litre. And recently, the president of the World Bank, Mr. David Malpass, expressed concerns about some of the loans China has been loaning to developing economies in Africa. It comes amid worries that countries including Ghana and Zambia are struggling to repay their debts to Beijing. This call for worry for Nigeria as the nation's debt profile continues to rise. A fellow of a chartered accountant of Nigeria and lead consultant for 2612, Mr. Peter Adebayo, says borrowing is another, but the country needs to borrow sensibly and apply sensibility in spending the loans.
Let me make a distinction. Borrowing is an integral part of life. Whether you are an individual, whether you are a corporate entity, whether you are a government, whether you are a religious body, borrowing is inevitable in life. America has the largest economy all over the world.
Yeah.
You take a look at other countries like Japan, like China. Those are the largest economic, countries all over the world. But they borrow. The largest indebted nation in the world is the United States of America. Yes. Now, the issue is, I don't have any problem with borrowing. And I can tell you, without blinking an eye, that borrowing, there's no problem with borrowing. What is wrong with borrowing is when you borrow insensibly. Nigeria, we are supposed to borrow sensibly. One thing is for you to borrow sensibly. Another thing is for you to apply the process of that borrowing sensibly.
Yeah.
Sometimes we borrow sensibly, but the application of the process of the borrowing, we do not apply sensibility in it. So I don't think there's any problem borrowing. I mean, people, before people will now say, after all, Dangote is owing. Dangote will continue to owe. Dangote did what Nigeria could not do over the last 2 decades. He said, okay, fine. 5 years, I want to set up a refinery. We're going to get there. He did set up the refinery. Of course, he's still owing, but I can tell you that is a business debt.
Yeah.
Now, when you are owing, there is a reason why you are borrowing. Why are you borrowing? You are borrowing to finance infrastructure. How do you guarantee? In public sector, there's what we call committed fund. In public sector, the moment a fund is committed on no account, under no circumstance, must a naira be taken out of that committed fund to other things. So until we come to terms with discipline, and of course that takes me to accountability. There is no accountability.
Mr. Peter Adebayo there who was on our show, Business Nigeria. Outside the country now, stocks fell broadly and the US dollar also weakened early today, reflecting investors' uncertainty in a busy week for corporate earnings and economic data. MSCI's broadest index of Asian Pacific shares outside of Japan was down 1.2%, while markets in Australia and New Zealand are shut for a holiday. US futures stock, the S&P 500 E-minus lost 0.3%. In nearly European trade, the pan-region Eurostock 50 futures were down 0.3%. German DAX futures and FTSE futures fell 0.2% and 0.3% respectively. Japan bucked the trend over raw stock weakness as the benchmark Nikkei average gain 0.4%, touching 8 months high as strong chip investment lifted tech shares over in China. Hong Kong's benchmark fell 1.9%, while mainland stocks lost 0.9%. Yesterday, the Nasdaq closed lower, underperforming the S&P 500 and the Dow Jones. The pressure from high-profile investors also affected that stock. First Republic Bank shares sank more than 20% after the closing bell on Monday, as deposit plunged by more than $100 billion in the first quarter. On it was exploring options such as restructuring its balance sheet. The deposit slump overshadowed profits that beat expectations for the company. Shore up through deposits from U.S. banking giants last month after two regional lender collapsed. However, San Francisco-based First Republic has planned to shrink its balance sheet and slash expenses by cutting executive compensation, paring back office space, and laying off nearly 20% to 25% of employees in the second quarter. The company also aims to increase its insured deposits and cut borrowings from the Federal Reserve Bank. South Korea's economy returned to growth in the first 3 months of this year, avoiding its first technical recession since 2020. The gross domestic product expanded 0.3% in the January to March period from a previous quarter, following a 0.4% contraction in the final quarter of last year. The Bank of Korea projects that South Korea's GDP will grow by 1.6% this year from 2022, slightly higher than International Monetary Fund's forecast of 1.5%. The economy grew 2.6% in 2022 from a year earlier, that's according to the central bank. Central bank adds that the GDP figure was driven by 3.8% growth of exports and strong shipments of autos, alongside a 0.5% increase in private consumption. In recent years, South Korea's economy has become increasingly reliant on exports amid sluggish domestic consumption. March exports were down 13.6% from the previous year due to weak demand for semiconductors and global economic slowdown. That's according to the Trade Ministry. And finally, on business news, oil prices held steady today as investors weighed strong holiday travel in China that could boost fuel demand against the prospect of rising interest rates elsewhere, slowing economic growth. Now, U.S. West Texas Intermediate crude rose to sell at $78.78 per barrel, with an uptick of 0.03%. Brent crude futures also experienced an upward price review of 0.02%, selling at $82.75. Bonny Light recorded an upward price margin of 0.68% and is selling at $81.76 per barrel. And for the OPEC basket, crude dealers are offering $84.41.